Hi, good morning, good morning, good morning. Awesome, awesome. So now, guys, are you able to see my slide? If you can see my slide, give me a 1 in the chat, okay, so that I know you're able to see and hear me loud and clear. Good. Now, guys, just double checking. Okay? How many of you here you are ready? Okay, you want to generate constant returns from your stock investment? If you want, give me a yes in the chat, right? Because today I'll be sharing with you 3 steps. Okay, how are you going to generate consistent returns from your stock investment? Low risk, high return strategy, profit from any stock market. Doesn't matter whether you invest in Philippine markets, or let's say you want to invest in the US market or Hong Kong market, right? Anywhere in the world. Yes, thank you. Okay, I believe this is what you are looking for. Well, if this is not something that you're looking for, then probably you're at the wrong room. Okay, so but I believe this is a correct room for you, so that you want to actually generate good constant return in your stock investment. Okay, so of course I believe some of you, maybe you know me, some of you maybe this is the first time that you are seeing me, so let me just use about 3 to 5 minutes to do a quick simple self introduction about myself. Okay, so now the thing is, hi, my name is Alex. So right now I'm in Malaysia, right? Speaking to you guys from Malaysia in Philippines. Good to see you guys, right? Good morning, everyone. Now, today I'm a speaker, trainer, and coach, teaching people just like you how to invest safely, generate good investment. I used to be an auditor from Deloitte. Now, just in case some of you here, you don't know Deloitte, Deloitte is actually one of the big 4 accounting firms in the world. So we have Deloitte, KPMG, Ernst & Young, and PwC. So I was from Deloitte as an auditor. Then later I decided to switch my career to become an investment analyst, fund manager, to manage a $20 million fund in a fund management company. Then later I decided to switch my career again to become who am I today as a teacher, teaching people how to invest safely, generate good results. Now, a lot of people ask me, Alex, why do you want to switch your career from a high pay, stable income job as an auditor, as a fund manager? Why do you want to switch your career to become a teacher, teaching people how to invest? Well, the reason is very simple. Is because how many of you here, you know investing is important? If you know investing is important, give me a yes in the chat. Come on. I believe all of you here, you know investing is important. That's why you are here in this particular session. Yes or no, right? Now, you know investing is important. I know investing is important. Everywhere out there, everyone out there, they also know investing is important. However, I realized one thing. Despite knowing that investing is important, a lot of them, they do not know how to invest well. Now, when they do not know how to invest well, they either don't invest or simply invest, burn their hard-earned cash, hard-earned money, which I don't think is wise. So since personally, I know how to manage my own personal fund, I also know how to manage my company fund, $20 million fund back then. That's where I decided to switch my career to become a teacher, teaching people how to invest safely, generate good results. Okay, now I switched my career about 5-6 years ago. Since then, I travel quite a bit, right? Not just in US, UK, India, Europe, Singapore, Malaysia. I also traveled to Philippines quite a few times to actually give some talks. Okay, different countries, different cities, big stages, thousands of people, small stages, 100 of people. Actually, to me, it doesn't really matter to me how big the stage, how big the crowd. To me, most importantly is you. Okay? As long as you really go all out, fully committed, want to be a successful investor, me and my team here will go 100% all out to actually support and guide you in your investing journey. So let me check in the chat, just comment below, right? How many of you really fully committed, want to be a very good, successful investor? If you're 100% all out, give me a yes in the chat box. Okay, if really 100% or fully committed, want to be a successful investor for your better financial future, give me a yes in the chat box. Thank you. Now let me assure you, if you go 100% all out, me and my team here will go 100% all out to support and guide you in your investing journey as well. Now, other than that, personally, also very blessed, have this opportunity to share some of my investment views, investment ideas in certain press, English press, Chinese press, and being invited as a guest to share some of my investment views and opinions as well. Well, if you happen to read it, watch it, and take some action about it, I believe you also make some good, decent results for yourself. Okay, so yeah, that's me. A quick, simple self-introduction about myself. I also don't want to spend too much time talking about myself, because for the next 1 hour, you know more about me, and I believe today, this 1 hour, you are the more important person in this room. Okay, first thing first, of course, you must find a method that has a proven track record. Yes, you are right. Proven is very important, because when we invest in the stock market, we are investing our hard-earned savings, hard-earned money, right? We do not want to risk our investment using a not proven track record. Yes or no? I mean, not proven investment strategy. We do want to risk our money, right? We want to use a proven track record investment strategy. So now what is this strategy all about, right? Let me introduce you this gentleman. Now, I believe, okay, you know who is this person. Just in case, okay, just in case if you don't know who is this gentleman, his name is called Warren Buffett. He's one of the richest men in the world and probably the best investor in our era. He says this: we simply want to buy a great business at a very reasonable price. Okay, let me repeat myself. And by the way, just jot down your notes, This is very, very important for your investment success. Okay, Warren Buffett says this. Okay, in order for you to be a successful investor, we want to buy a great business at a reasonable price. Okay, now let's take a look at his company. Okay, now his company is this company called Berkshire Hathaway. Okay, now look at the share price as of today. As of today, or 26th January, 4 days ago, when I'm preparing the slide. Okay, per share, per unit, okay, his share is $460,000 US. By the way, you did not see wrongly. I did not say wrongly. And if you want to double check, you can rub your eyes again and double check the numbers again, right? Yes, you heard it correctly. Okay, per share, per unit for Berkshire Hathaway is $463,000 US. So some of you might say, wow, Alex, I need to sell away my house just to buy one share. Well, maybe, right? Some of you maybe you say, wow, Alex, even I sell away my house, I also cannot buy even a share. Yes or no? Right? Now, imagine this. In 1965, if you just invest $10,000, okay, let's say Philippine dollars, invest 1965, okay, invest and go to sleep, do nothing. Okay, you don't need to look at the share price. Okay, don't need to actually worry the up and downs, the fluctuation. Don't need. Okay, today you wake up. Okay, today you wake up about 57 years later, okay, which is today. Your 10,000 Philippine peso right now become $100 million. If you think that's impressive, comment below, say WOW in the chat mark, because that is very, very, very impressive. For the past 50 over years, every single year, his investment return actually generate 20%, 20%, 20% safely and consistently every single year. Now, ladies and gentlemen, why do I share with you this story here? Warren Buffett has been using this strategy for almost 60 years, right? Almost 60 years. And this year, he is 90 years old, 90 plus years old. And this tells us two things. Okay, this tells us two things. At 90 plus years old, I believe his risk appetite is not as high as, those in the 20s, 30s, 40s, right? Because he's 90 years old. Now, the strategy that you have been using, what does it mean? Means this strategy is low risk. Even someone with 90 years old risk appetite also can handle that risk. Sounds good to you? If that's good, give me a good in the chat mark. 90 plus years old, right? Still able to use this strategy. And the thing is this, he has been using this strategy for the past 60 years, which means what? He has been using this strategy since he's 20s, 30s, and since then until today, for the past 60 years, he only used one strategy, one and now what does this tell us? Means doesn't matter whether today you are 20s, 30s, 40s, 50s, 60s, 70s, 80s, or 90s. You can use this strategy to invest low risk, generate good, consistent return. If you love that, give me an LOVE, love, in the chat mark. This is the power of the strategy that he has been using. Would you agree with me? He has been using this strategy for the past 60 years. This is a proven track record strategy. Yes or no? Right? So now what is the strategy that he used? Okay, he used this strategy called value investing. Now I believe, okay, some of you here, you probably heard of value investing. Some of you here, you might not heard what is value investing. Never mind. Okay, let me explain in detail what is value investing all about. Then later I give you practical case study. How are you going to practically apply value investing in your investment? Okay. Now, what is value investing? Let me give an example. Right. Now, let's say you want to buy a house. Okay, this is a pretty house. Yes or no? Right. Let's say you want to buy this house. Okay, and this house, you realize the property value is $1 million. Okay, $1 million, and the seller only want to sell you at $1.5 million. Now, ladies and gentlemen, let me ask: Would you pay $1.5 million to buy this house at 1 million? Yes or no? Right? Quickly, okay? I give you about 2 seconds to answer the questions. Come on. Would you pay 1.5 million to buy this property, which is only $1 million? Right? Yes, exactly. The answer is no. Why? Because that is called overvalue. You do not want to buy, okay, this property with 1.5 million because you are paying 1.5 million to get something worth 1 million only. So you walk away, you don't buy. But what if, okay, the property value is 1 million. However, the seller is willing to sell you at 800,000. Would you buy? Now, guys, if you buy, comment below, say B-U-Y, buy, come on. Why? Because right now you are paying 800,000 to get something worth 1 million. Can you see that? So this is called undervalue. Okay. So now we make our buying and selling decision based on this thing called value. Can you see that? Right? We make our buying and selling decision based on this thing called value. Now, if the price, okay, if the price is above the value, we call it overvalue. We don't buy. Okay, we sell. Now, of course, when the price is below the value, this is the value, this is the price. Where the price is below the value, when it is undervalued, that is when we buy. Okay, so now, how does this apply to stocks? Okay, when we make our buying and selling decision on stock market, right, it's the same. We make our buying and selling decision based on this thing called value. Yes, property got value, stocks also got value. Now, how to determine the stock value? Okay, let me explain to you. First thing first, I believe every one of you here, okay, you should know behind every stock there is a business. Well, if you don't know it yet, I'm glad that you are here so that you know this right now. Okay, behind every stock there is a business. So when you buy a stock, you are buying into a business. When you own a stock, you are owning a business. When you invest in a stock, you are investing into a business, right? So now, how to determine the value? How to determine the value? Let me give you an example. Okay, so now, let's say you invest in this particular business, and every business, right, they sell certain products and services, right? They provide some products, the services. The more they sell, the more money they make. Okay, the lesser they sell, the lesser money they make. Of course, we want to invest in a stock, we want to invest in a business where they're able to sell a lot of products and services. Why? Because the more product services they sell, the more money they make. The more money they make means the more value the company is. Can you see that? Because if the business sell less stuff, if the business sell less product, less services, they make less money, which means the value is also very low. However, if the business can sell a lot of product services, they can make a lot of money, means the value is very, very high. Okay, now let me give you an example. Okay. Now, I use this case called Tesla. Recently, very hot. Yes or no, right? I believe all of you here, you know Tesla. If you know, give me a yes in the chat, man. Electric vehicles by Elon Musk. Okay. Now, let's assume you know how to determine the value of Tesla. Okay, and you realize per share value of Tesla right now is about $1,000 a share. Okay, you realize the value is $1,000 a share. Then you go to the stock exchange to check the share price, or in fact, you can just check on your phone right today, right? So what is the share price of Tesla? Now, let's say you realize as of today, the share price is $1,200 a share. Now, ladies and gentlemen, would you buy? Yes or no? Now, I believe you will say, no, you won't buy. Why? Because why do you want to pay $1,200 to get something worth $1, right? Over here is overvalue. Okay, you do not want to pay 1,200 to get something only worth 1,000. Okay, now let's say for whatever things happen, okay, let's say recently the Feds want to increase the interest rate, okay, cut down the tapering, right? All these China and US tension, right? A lot of noise, okay, the share price actually drop, okay, from 1,200 drop until $800, and you realize the business value for Tesla still remains at 1,000. However, the share price of Tesla is currently at $800 a share. Now, ladies and gentlemen, would you buy? If you buy, give me a B-U-Y, buy in the chat mark. Right? Thank you. Right now, yes, exactly. You will buy. Why? Because you are paying 800,000 to get something worth 1,000. Can you see that? Right? Right now, it is undervalue. Okay, right now this is undervalue. Okay, now can you see that? In terms of investment, doesn't matter whether you invest in Philippines stock market, US stock market, Hong Kong, China, doesn't really matters, right? We make our buying and selling decision based on this thing called value. Okay, if the price is above the value, we don't buy. Okay, because that's overvalue, right? If the price is below the value, then we buy because that's undervalue. And write this down in your note. We only invest when it's undervalue. Okay, we only invest when it's undervalue. Okay, I give you about 2 to 3 seconds to write this down in your note, right? This is very, very, very important. Okay, we only invest when it's undervalue. Okay, good. Now, that is step one. Okay, step one, understanding what is the strategy, right? What is a strategy? But the thing is this, would you agree with me? Strategy is just one thing, right? You need to know how to apply the strategy, right? Now, how to actually apply the strategy? Now, you need step two. Okay, step two is this. You need to get yourself a mentor. You need to get yourself a coach to guide you through. Why? Because strategy, honestly speaking, is just theory. Yes, theory is very important, but I believe practical stuff is much more important than theory, right? You need to actually use those theory and make it practical so that you are able to generate a good results that you deserve. And a mentor will be able to guide you through, okay? Cut through all the bushes, cut through all the noises, show you the shortcut, what you should do and you should not do. Now, in fact, let me share with you my experience. Now, I started investing at the age of 19 years old. This I'm 31 years old, so I have like 12 years of investing experience. Now, for my first 2 years of my investment, I did very, very bad. Right? I lose a lot of money because after I read, Rich Dad Poor Dad, the book from Robert Kiyosaki, I thought investing can make a lot of money, right? So for my first 2 years, I just invest, okay? In fact, I'm not investing. I'm just speculating and I'm just gambling. So that's why I lose a lot of money. So at the age of 21 years old, right, that's where I discovered this particular gentleman called Warren Buffett. Now, when I realized Warren Buffett, he's so successful in terms of investing, I studied more, right? I researched more about him and understand him. And I realized one thing. Yes, despite Warren Buffett is one of the best, or in fact, the best investor in our era, he did not self-teach. He did not self-taught himself in terms of investing, right? He actually, right, also has a mentor, right? That really surprised me. That really inspired me. Why? Because Warren Buffett is one of the richest men in the world, right? When I was like 21 years old, he is already one of the richest. He is also very, very successful. And I realized even those successful investors, he himself also have this mentor, and his mentor is called Benjamin Graham. Okay, you can write this down on your note. Okay, his mentor is called Benjamin Graham. So very quickly, I asked myself, hey, who am I? Right? I'm just a nobody, right? I'm just a nobody called Alex, right? In order for me to be successful investor, in investing, I need to get myself a mentor to guide me, because Warren Buffett also need a mentor. Definitely, I do need a mentor as well. So quickly, I do a quick research and I realized, back then, Benjamin Graham and Warren Buffett, both of them, they used to teach investing in Columbia Business School in US. Okay. Now, of course, during that time, I really, really want to fly to US, attend this Columbia Business School to actually learn the value investing strategy from both of these legendary investors. But during that time, at the age of 21 years old, I just don't have such amount of money. But luckily around that time, I saw this particular gentleman, Ken. His name is Ken. By the way, his name is he's a Singaporean. He's a CEO of a 2 listed company, and I'm very, very glad I'm able to meet up with him, right? And he actually attended this value investing program in Columbia Business School. And when he actually fly back to Singapore, he said, you know what, right? I would love to teach value investing strategy to people in Singapore and Malaysia. So very, very glad I have this opportunity to meet up with him, my mentor, to learn the value investing strategy. So during that time, at the age of 21 years old, I decided to attend his program where I learned all the practical stuff about value investing, not just about theory only, right? So he really guided me through from theory aspect, guide me through the practical stuff, how to hands-on do that, right? Now, of course, how many of you want to see my results after actually learn from my mentor, right? If you want to see my results, give me a yes in the chat Because honestly speaking, today I'll be sharing with you the practical stuff, right? I do not want to share with you just theory. I mean, theory is important, but practical stuff is much more important than theory, right? So I believe results is very important, right? So let me share with you my passive income that I generated last year. Very simple as that. So now, this is my January passive income. I generated about 1,000 US dollar, right? February 2004, March 3004, April 1006, May 900, right? June 1000, July 4003. By the way, all these are just my passive income, okay? August 1008, October 2002, November 1003, and December 2000. So my total passive income for year 2021 is about 22,000 US dollar. Right? If you think that's quite a good, decent results, give me a love in the chat, come on. Right now, you must understand, right? I've been losing a lot of money back then, and today I'm able to generate about 22,000 US dollar pure passive income. To me, right, I think this is something is a result that I think I definitely can share with you guys so that you can also generate good results for yourself as well. Okay, now the thing is this. Right? In fact, this is by Warren Buffett, not Warren Buffett, Warren Buffett, good friend, okay? Tony Robbins. I believe a lot of you here, you might know Tony Robbins as well. He says this, the best way to get trained is to get yourself a mentor, okay? Live or by reading or watching videos by master, the way you start executing based on lessons from the best. Again, today I'm very proud of you guys because you are here seeking for mentorship, right? Coaching from people, experts around the world, around the different industries, so that you also know how to invest well as well. So really well done for that. Okay, now next is this. So this is step 2. Okay, this is step 2. Okay, first you need to understand the strategy, right? Second, okay, you need to actually get yourself a mentor so that from theory you're able to bring down to practical stuff. And the third, which is the most important part, which is you need to take action. Simple as that. All right, because after theory, right, after you get yourself a mentor, you need to apply what you learn. Okay, it's because a lot of people say skills and knowledge is power. Well, I kind of disagree with that. Why? Is because yes, skills and knowledge is power, but it's not full power yet. Right? Because applied knowledge is power. If you don't apply the skills and knowledge, it's just information. Simple as that. We need to apply the information. We need to take action, right? Really work on it, get our hands dirty so that we're able to generate the results that we deserve. Now, some of you might say, but Alex, right? But stock market is risky. Now, how many of you have this impression, right? Well, Alex, stock market is risky. Now, the thing is this, would you agree with me? Would you agree with me? In life, whatever that we do, there's certain risks. For example, when we eat, there's also risk. Yes or no, right? I mean, what's the risk of eating? I mean, we might eat something dirty and we might feel stomachache and diarrhea. Yes or no? Now, let's say we are crossing a street. It's also pretty risky, but how come you still cross? I mean, then you might say, Alex, I know, okay, crossing the street is risky, okay, eating the food sometimes is risky, but I take precautious activities. Let's say, for example, before I eat, I make sure I wash my hands. Before I eat, actually, I make sure I go to a clean, hygiene restaurant, or maybe I prepare my own food so that I won't get diarrhea. And let's say you cross your street, right? You make sure you look left, look right, look left to make sure that there's no traffic before you cross the street. Now, the thing is, can you see that? The thing is that it's not about eating, there's no risk. It's not about crossing street, there's no risk. There's risk. However, because you have the skills and knowledge to take the precautious step, it actually reduces your risk. Can you see that? Now, stock investment, right? I won't say that there's no risk. Right? If I tell you that there's no risk, okay, you can slap me and leave the room. Now, I'll be very clear with you, right? Because yes, there are risks, okay, in terms of investment. However, with proper skills and knowledge, it's able to minimize our risk. Write this down your note. Risk comes from not knowing what you are doing. If you have no idea what you are investing in, right? If you have no idea what are you doing, yes, the risk is very, very high. However, if you know what you are doing, right? I'm not saying that there's zero risk. I'm not saying that there's no risk at all. However, we are able to reduce our risk. It's just like when we wash our hands, okay, when we go to a clean restaurant, sometimes we still get diarrhea or, stomach ache. Why? Sometimes it's just unlucky, yes or no, right? But with this, now some of you might say, but Alex, you know what? I don't have any financial background. I don't have accounting background. I don't have financial background. I don't have investment background, right? How am I going to invest? Well, I've been doing training, coaching for many years. This is about the 6 years. And I realized one thing, okay? A lot of people that is good in investing, right? A lot of them, they are actually from an IT background, engineering background, arts background, and one more is housewife. Okay? For some reason, please don't ask me why. And interestingly, right, not many of them, they are from finance or accounting background. Interestingly. Now, I'm not too sure why, but this is what I found out for the past 5 to 6 years. Well, maybe, you know, as a housewife, as an engineer, as an IT industry background, right? A lot of them, they have different thinking process. That's what help them in terms of investment, right? So now, the thing is, honestly speaking, yes, I do have accounting financial background, and I realized one thing throughout my 12 years of investing experience, you do not need to have financial background. Okay? You do not need to have accounting background. Why? Because being financial literate is much more important than having an accounting or financial background. Okay? As an accountant, we are trained to prepare the income statement, the annual report, right? The financial statement. That is an accountant job. However, an accountant, they do not know how to analyze those accounts. As an investor, we need to know how to analyze a business. As an investor, we do not need to know how to prepare the account. We do not need to know how to prepare the numbers. However, as an investor, we need to know how to read those numbers and understand the story behind all those numbers. Why? Because numbers, okay, tell certain story. Okay, now I know some of you might say, well, Alex, I'm numbers challenged. Okay, since young, my teacher tell me, right, my numbers cannot make it. Well, don't worry. Later I'll show you how. Okay, very simple step by step so that you able to invest well and generate good, awesome return. Okay. Now, of course, how to actually do that practically, right? Over here, let me share with you these 3R strategy, a very, very important rule in value investing. Okay, write this down. 3R, right? 3R. Now, what is this 3R? Let me explain to you one by one. Okay, now, first R, okay, is right business model. Now, why this is very important is because, again, when we invest in stocks, okay, we are investing in the business, right? In order for us to make money in the stock market, okay, the business must make money. Why? Because we buy into the business, we invest in the business. The business must make money. So the business model must be very good, right? Must be strong, right? Able to actually defend themselves from competitors, right? Able to actually win market share. This is very important because a good business model will help us to make a lot of money. A lousy business model will help us to lose a lot of money. This is very, very important. Okay, we want to see how big is the market share, right? Are they able to grow their business, right? Are they in different countries operating? All these are very, very important, right? So this is the first R, right? Business model, right? And then the second R, right? And then the second R. The second R is the right management, right? The right management. Now, the thing is this, why do we need to look into the management team, right? Again, behind every business, there's a group of people running the business, yes or no? And this group of people is called a management team, the CEO, the CFO, the COO, or the C-level, right? So when we invest in a stock, we are basically putting our hard-earned savings, hard-earned money into the hands of this group of people, which is called a management, right? So we want to understand whether this group of people, they are capable, right? Whether this group of people, they are good, right? Whether this group of people, they have the ability to protect our money and also grow our money. We do not want to invest in a business where the management is a scam, right? We do not want, okay? We do not want to invest in a business where the management, cheat the shareholders' money. We want the management to protect the shareholders' money and grow the shareholders' money. This is very, very, very important, okay? So this is the second R, okay? So let me repeat. First is right business model, which is very, very important. We want to understand how strong is the business. Are they able to defend themselves from their peers, right? And able to grow their business, grow market share, sell more products, or they are able to increase their price so that they can make more money, right? And second, we want the business to be run by a good team, good capabilities management, right? Good experience that protect the shareholders' interests, right? And third, right, which is very, very important, after looking the right business, right management, we want to look into the right valuation versus price, which is what I told you earlier, right? We want to buy when it is only undervalued. Okay, we do not want to buy when it is overvalued. Okay, so now, of course, how to apply this 3R strategy, right? How to apply this 3R strategy? Let me show you practically step by step. Okay, so let me just do a quick share screen. Okay, now how many of you learning something so far? If you're learning and enjoying my session so far, comment below, say enjoy in the chat, and while I'm doing my share screen. Okay, okay, thank you. If you enjoy my session so far, let me know if you're enjoying. All right, and in the meantime, I'll do a quick share screen. Okay, very good, very good. Thank you, thank you. I'm glad that you're enjoying. Thank you so much. All right, now, can you see my Chrome? Give me a 1 in the chat. All right, if you can see my Google Chrome, give me a 1 in the chat. All right, thank you. Very good. Thank you, thank you, thank you. Right now, so this is Century Pacific Food, okay, listed in PSE. Okay, now just in case if you have no idea what is this company doing, right? Let me show you the business model, right? A business model. And by the way, this platform that I'm using is called VF, which is a platform that my company actually built on. Okay, now this company, right? Century Pacific Food, okay, Century Pacific Food. Okay, let me show you what they are doing. The right business model, okay, the right business model. Okay, so what they do is this, okay, they produce and sell canned food products in the Philippines. Okay, so you know canned foods, right? And they have operates in 7 segments: canned and processed fish, meat, milk, tuna export, cocoa water, and packaging and corporate, right? So this is very, very good business. Okay, now let's look into the management team. Okay, let's look at the management team. Okay, now let's take a look here. Okay, so the executive is Christopher Paulus, right? Nicholas, right? This is the vice chairman. Right, so this is the COO, all these things, the management team, okay? And you can see that, you know, the Century Pacific Group owns about 68%, which means what? The management team actually owns 68% of the company. Now, this is very, very good number, good percentage. Why? Because they are the largest shareholder. As a largest shareholder, do you think they want to protect their wealth? I believe, right? I believe you want to, I believe if you own a business, 68%, you want to protect it and grow it, right? Now, when they want to protect their 68%, when they want to grow their 68%, for the rest, 32%, which is owned by other retail investors like you and me, we will be protected as well. Okay, this is very, very important. Okay, now, of course, other than that, okay, a lot of fund manager also invest in this company as well. Okay. So now let's take a look at how is their performance. Right? How is their performance? Okay. Now over here, me and my company actually built this thing called a V risk rating. Now this risk rating basically help us to analyze the management capabilities to see whether they actually do some, hanky-panky stuff, right? To see whether they are protecting our shareholders. Now, how to determine the medium risk, right? So me and my team actually built very detailed analysis, right? Check through everything. By the way, all these are institutional level kind of checking, right? Some of you might ask, Alex, what is this inventory management? Because there's high risk, right? So click on this I info button or explain to you what is it all about, right? And to show you, okay, there's a lower inventory cost, right? So there's some inventory management issue that they are facing. But overall, right? They are a medium risk business. Now, if you are a beginner, right, if you just start off investing, my suggestion to you is this, right? Please start off your investment on either medium risk or low risk business first. Okay. Now, I'm not saying that you cannot invest in high risk business. Yes, you can, but maybe gain some good experience from investment at least 3 to 6 months first before you explore into high risk investment. I think that's very, very important for you, right? So of course, we know that the management is good, the stock is low risk or medium risk for this. Then we want to see how good is the business. Are they making profit, right? Now, let's check this out. Okay, me and my team actually built this thing of V-Star chart. Now, of course, V-Star chart, V-Star chart help us to actually analyze the company as a whole. Okay, now for those who have accounting knowledge, financial knowledge, definitely you can look more details. Definitely you can look more details on on these right now. Because of time, I'm not able to go through with you every single detail, but let me show you a shortcut. And let me show you a shortcut where me and my company attribute this thing called a V-star chart. Okay, now what is this V-star chart all about, right? V-star chart, we use 107 key financial matrices to analyze every listed company in the world. Okay, so we analyze, Philippine stocks, Singapore stocks, Malaysia stocks, Hong Kong, China, US, everywhere, okay, everywhere, and look into their 5 different areas: profitability, health, asset, dividend, and growth. Okay, 10 of 10 is the best. 0 means no marks. 6 and above is passing rate. Okay, so Century Pacific scores 7 out of 10 for profitability. I think that is very, very great, right? Now, health, 8 out of 10, again, is powerful. Would you agree with me? It's very, very healthy. They are growing strong and giving good dividends as well. Now, some of you might ask, Alex, how do you determine the 7? How do you determine the 8? How do you determine the 9? All these things. Now, let me just scroll down. Okay, everything is very detailed and comprehensive. Let me click on this one. Okay. So very, very detailed analysis, step by step. All these are institutional level kind of analysis. Now, some of you might want to know, Alex, what is this ROIC, right? And then you just click on this question mark. Something will pop up. Okay, it will explain to you step by step what is going on, even though you don't have any accounting or financial background. If you love that, give me an LOVE, love, in the chat mark. Okay, a lot of you actually asked about this app. Now, okay, good. Now, how many of you, you can see the power of this app, right? If you can see the power of this app, give me a good in the chat box. Right now, this is very, very powerful, right? I'll share a bit more later on, okay? But let me complete. Let me complete this. Let me complete this. Okay. So we found that the business is very good, making a lot of money, good profit, good health. Okay, good medium risk, right? So now, can we consider to invest, right? Of course, we can consider invest, right? So we need to check on the value. Okay, we need to check on the value. Okay, now, of course, how to determine value? Because of time, I'm not able to go through with you step by step, but not to worry, I got you covered. Okay, now we have this valuation strategy platform here for you as well to guide you through as well. So now, based on price to sales valuation strategy, okay, PS, just in case you want to know what is PS, price to sales, you can click on this I, and I will explain to you what is going on, right? What is this strategy all about? And now, can you see the value per share is 20 pesos, right? Philippine pesos. Right now, the share price is about 28 Philippine pesos. So, ladies and gentlemen, comment below. Right now, it is undervalued or overvalued. Comment below in the chat. Right? Is it undervalued or overvalued? Comment below in the chat. Okay. So now the value is 20 pesos, right? Philippine pesos, and the price is 28 Philippine pesos. Okay. So it is right now overvalued. Okay. So yes, it is a good company. However, it is an overvalued good company right now. So if you're interested to know more about this business, maybe you can do some study, do some research, understand more about them, and only invest when the share price drop a little bit to $20 or below before you invest in it. All right, so that's very, very important. Okay, now the thing is because of time, I'm not able to go through with you every single little details because I do have a lot of things. Okay, but how many of you would love to have more session, right? More time with me. If you would love to have more, give me a more in the chat mark. Right, if you love to have more, give me a more in the chat, right? Because I would love to guide you, right? Guide you through. But today, unfortunately, I only have like 45 to 1 hour session with you guys, and later I will end off my session with Q&A. I would love to actually further support you guys. So with that, thank you everyone, right? Love you guys. I'll see you on the 5th of February. Bye bye.